Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of December, 2021, and this is the weekly technical analysis for spot gold and dollar yen for the second week of December. Let's begin with spot gold. And it has been a very volatile week, but within a narrow range with a lot of rejection at the resistance level. You can see all these multiple wicks. The new monthly pivot set on Wednesday is at 1803.39, and for last week the new weekly pivot is at 1806.20, so within this 30 pip range, and it has been rejecting the price for spot gold and is starting to drift lower until Thursday, and then Friday it picked up because of a slightly poorer, weaker jobs data from the US with the non-farm payroll, and it's managed to find support at this area here from these swing lows, so it didn't quite reach there. So this is managed to find some support here, and that swing low is at 1760 area, so didn't drift all the way down to the 1750, which is a critical support zone. And the resistance that we marked was also just above the 1800 and happened to align with the monthly pivot, which has drifted down lower as well. So all around this daily 255 EMA zone here. So this is a significant resistance zone. Just extend this zone here a bit. Okay, so it did try to climb back up and sitting above the 62 pip retracement of this move up. So this is a critical support area if it's trying to recover. Otherwise, this 786 will be the next support, along with the 1750. That's the support zone. Okay, and if we look at the weekly time frame, it closed as a spinning top. So still finding some support, and looks like there'll be some consolidation. And yeah, you notice that I've also changed the background so that I'm trying to make it easier to see both the monthly and weekly pivots, because that's critical for the start of each week and the start of each month. And this week there's only minor news. On Friday for the US with the CPI and the prelim University of Michigan consumer sentiment figures. So a lot of minor news this coming week. So we'll see some technical movement. It looks like it's basically consolidating in the range and trying to drift lower in a slightly bearish channel, but it's difficult to draw that for now. So we can also identify this as a support zone here. Now that it is climb up above the swing low. So perhaps I'll make this lighter, and this zone here will be darker. Okay. So it looks like it's going to be consolidating further next week between the 1800 and probably the 1765, I would say. Let's also take a look at the US dollar index to see how it has been reacting. And it was stuck between the two fibs for last week, between the 138 and 162 that we identified, support at the 138 fib extension, and could not break out higher above that. So you'll see that on Tuesday, there was a wild swing, wide range candle here. That was on Tuesday, the Fed Chair's Powell's testimony to Senate, where he did highlight that the QE, the tapering pace of reduction could be pulled in and completed by mid of next year, mid 2022, and then perhaps even the interest rate hike could be done even earlier. So that was surprisingly hawkish from Fed Chair Powell, since it's only just a testimony here after their FOMC meeting. So it gave a boost to the US dollar initially, but then after that, it retraced back lower again. So if we take a look at the 4-hour time frame, last week that was the bullish move, push up higher, but then retrace back lower quite significantly, and then consolidated and drifted a bit higher for the rest of the week. So it's basically consolidating in this range here. We can basically also identify this as the range. Okay, probably this box here. Go back to the daily time frame. Yeah. See, that's the consolidation. So this could continue this week as well. And you can also see a triangle being formed here as a consolidation. So let's add that in as well. Right. So unfortunately, after bullish move the previous week, and has started retracing slightly, and we'll see some consolidation for a while before it attempts to break out again, either one way or the other. We'll have to wait and see for the next fundamental driver. Okay, let's move back to spot gold. And is a low trend line. It could even be a descending wedge here. So we could see some attempt to break out higher, but it's limited with this resistance zone. Okay. All right, so next week we will develop, and we'll see the following week. That could be the major breakout move after that. Let's move on to dollar yen. It is also trying to find some support and trying to support from this swing low area here. This branch channel, let's use the thickness there. So the new monthly pivot has shifted to 113.73, and last week's weekly pivot is just above that at 113.94, and that was close to where our resistance zone is, just above the 114. That's still going to be a key resistance zone. It did not come down to the 50-fib support area. So, but it did close lower on the Friday. So the upper wicks here, it shows a rejection at the monthly pivot and then drifting down lower. But then there's also support down here. So unfortunately, also another consolidation in a box area. So key support is at the 50-fib at the 112.32. So it has not come down lower. Let's take a look at the weekly time frame. And it is a bearish candle trying to drift down lower. It could just test that 50-fib next week. So there is a swing high area that we identified last week as well. That's the 112 level. That's going to be the next key support zone. So perhaps we can mark that as well. The 112, so that's the blue color. Okay, so minor news the next week. So let's see what the technical moves will be like. Unfortunately, it could be consolidating first before any potential breakouts. So the Friday's poorer than expected NFP data didn't really help the US dollar here. And the Tuesday move, that was the attempt to push up higher, but got blocked and then pull back down lower before it closed above the daily 55 EMA. So this was the move. The Tuesday move up and okay, it was blocked by the 4-hour 200. They tried to recover, climb back up higher, but then gave it back, retraced back down to the support, and yeah, basically just caught in this range with the 4-hour 200 as the key resistance. Back to the daily time frame. All right, so it's consolidation time again, and next week we'll see fairly narrow tight ranges here for all the major pairs until the next critical fundamental driver to either move the US dollar. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.